The hike in the capital gains inclusion rate, a tax change announced in this week's federal budget, is striking a nerve among Canadian entrepreneurs. Some say this increase will put pressure on investment and entrepreneurship in this country and even cause a brain drain. Let's bring Adam Felesky, co-founder and CEO of Portage Ventures. It's great to see you. So you're a private equity firm. You're focused on fintech, among other areas?
Yeah, specifically we're a venture capital firm. So we're focused on the earlier stage of investments. So young companies as early as $1 million of revenue all the way to companies that are making $30 million of revenue. So
I should have said venture capital, sorry.
No
and you manage how much?
We manage about $2.5 billion today.
Oh, okay. Your worry here is that entrepreneurs will say, well, the government's, when I do cash out, government will take a bigger take and it'll discourage them?
Look, I was a former entrepreneur. I started here in Toronto in 2005, and there wasn't a great ecosystem. Today, we invest globally. We invest in over 13 countries, so we have a choice of where we allocate our capital. And what's happened in Canada over the last 10 years since I've been on the investor side has been really exciting. The ecosystem's growing. There's amazing companies here, from Toronto to Calgary to Montreal, and those signs of success is what encourages entrepreneurs to take the leap. And I'd say in Canada, we don't have a natural DNA for risk-taking. And so anything that creates a further obstacle for us to take that leap, I'm worried about.
And you think this could be just a significant factor in deterring people?
Yeah, I think it could be a factor in those jumping out of their stable jobs, wanting to take that leap. I think the other potential issue is successful Canadians in San Francisco that have an exit. And we saw a huge reverse of the brain drain coming back to Canada. Michael Katchen, who has an exit at Wealthsimple, an exit in San Francisco, comes back to Toronto and builds an amazing business. He hires thousands of people, and now there's new businesses being formed that are ex-Wealthsimplers, or there's ex-Shopifyers now building businesses in our ecosystem. This is amazing, and we're just at the cusp of really having a successful ecosystem. And I just worry that this is the wrong time, particularly in a fragile time in the market. We've seen the amount of deals happening in VC in Canada drop way more proportionately here than we have seen in the US. So it just feels like the wrong time.
What about the carve-out for entrepreneurs, though? Isn't that enough to ameliorate these effects?
So one, entrepreneurs are not looking to make $250,000 to invest everything in their lives into the success of a company. They're looking for way bigger outcomes. And I know there's a bigger relief that steps up over 10 years, but inflation adjusted, that's quite frankly meaningless in terms of really the objective that entrepreneurs are trying to achieve. It's just taking away that incentive in my mind.
We heard from Trevor Tome, the economist, yesterday. He's a professor of economics. He said one problem here with capital gains is if you tax them at a lighter level than dividends or interest. He's more talking about big companies and their capital allocation decisions, but he says it creates distortions, and tax policy is not meant to do that.
Look, I'm not an economist or a tax expert. I'm a venture capitalist, but I know what motivates young entrepreneurs, and we need them to take that leap. And people who say that these tax changes don't matter, I mean, just look at the United States. The amount of growth of Austin and Denver. I'm spending a week in Nashville next week. Miami. These are hotbeds of new technology, young companies being formed. And that's really on the back of a lot of taxation policies, adverse taxation policies in the US most recently.
Do you feel we're not seeing that in Canada? I mean, Canada is a global center, or Toronto is, sorry, for medical technology, for example.
Yeah, look, as I said earlier, I think we've had a great run. There's been some great companies formed in Canada in the last little while, but we're not going to make it easier, and we're certainly not providing new incentives to make that industry grow even further. And as you know, there's been so much discussion on productivity. Entrepreneurs play a big role in that, and what they produce, as a unit of revenue relative to their cost base is exactly what we need to, narrow the gap in this country.
Would you be happy if there was a bigger carve out, a more significant one for entrepreneurs? Because I think a lot of people might say, well, why should somebody selling a second home get to pay a low tax rate? Shouldn't they have to pay the same tax rate as, for example, on income or interest?
I'm going to stay in my lane. My lane's venture capitalists,
sure.
and I don't, I'm not going to get into, who's more deserving or not. But I know that entrepreneurs in this country are super important, and they drive so much value. We've had so many successful companies of late that are hiring a lot of young Canadians, and they see that success as an opportunity and reason why they want to then become entrepreneurs themselves. And so let's keep encouraging that. Let's not constrain it.
There's been such a drought of tech IPOs in Canada lately. I know we had quite a few 3 and 4 years ago, but why is that? Why are people not going public?
Look, I think it's not just a Canadian problem. It's really a global phenomenon. I think there's two factors. One is private equity in general is much larger than it used to be, so they can fund companies longer, and that's why they're staying private. I also think, when you've got more challenging markets, and some recent difficult performing IPOs, the public market participants pull back. I think there's another factor that, particularly in this country, we don't have as much small cap as we used to, small cap managers. And, so there's a hollowing out of the market that, we all should be thinking about how do we address.
I guess the model has changed so much now. Brokers, investment, they don't call up a client and say, hey, I think this is a good stock generally. They're trying to sell managed money and stuff like that.
I think that's definitely part of the factor, but there's always opportunity for that great story.